Good evening. This is Dwayne Lowry for the DPP Grain Desk on Sunday, February 5th, Super Bowl Sunday. The outlook for tonight looks like we're going to start lower. I'm not sure exactly where to start to give the reasons in the storyline as to why we're going to be lower tonight, but I think in order to be accurate about it, we got to go back to last week. Last week and the last several days, we've seen some markets have an upward bias in the grain trade. In many cases, it's been difficult to point to a day-to-day reason as to why. The wheat market got a shot in the arm earlier last week on cold weather, winter kill concerns. There's probably a few days that was in the trade, but there's one day that it really became broadly known or accepted and embraced by the public, and that was about last Wednesday. By Thursday, that entire day's gains on Wednesday were completely eclipsed, and we weakened again further on Friday. The overall theme here for the last several days has been chasing shorts out of the market. It was most obvious in the wheat, but it's also been true about corn and beans. After the January reports, a bearish trade mentality developed. The markets have been finishing a short chasing event that began not that long after those January reports, and I think it probably finished with last week's gains. This week the trade is looking to USDA's monthly supply and demand report on Thursday morning. Trade expectations basically has the focus on the Argentine corn production estimate, which is expected to be down, but it seems like it's a pretty much mature storyline. Informa came out with projections on Friday that was actually a little bit higher than what the trade anticipated. The other focus in this week's Thursday report is going to be South American bean production estimates. Those estimates are expected to be down, but here too, that's not a new storyline. And in fact, if you go back over the weather of the last several days and the current weather and the current forecast, I'm not so sure the trade isn't about ready to start ratcheting those South American soybean production estimate numbers up. So regardless of what USDA has to offer on Thursday, I'm not sure there's going to be a prolonged bullish effect on it, because it's already going to be widely known, and the trade's going to begin to think that those numbers need to be working higher, not working lower from here. I think it also needs to be pointed out that from a global supply situation, it's going to be very difficult to really build a bullish case here in beans. It's going to be very difficult to build a bullish case globally in wheat. And in the case of corn, you can point to tight old crop stocks. You can point to tight firm cash corn basis and the need to get farmer movement. But I'm not sure that's a lasting storyline either. Whether it's right or wrong, the trade wants to look ahead to on corn. They want to focus on new crop. They want to focus on larger acreage. They want to focus on the idea is that if we get a trend line yield or even somewhat below a trend line yield, we're still going to look at a significant increase in U.S. corn carryout stocks for the 2012 crop marketing year. And I think that if you have a difficult time embracing the idea that the market might be changing its attitudes and it's going to be a different year than we've seen here recently, just think of this. Here we are, early February, and the trade is willing to look at the new crop scenarios and imagine a bearish scenario. It's been a long time since the trade really has been willing to do that and actually embrace it with some level of confidence, not fearing either an acreage battle, storyline, or a spring planting delay, or a summer drought, or whatever it may be. I'm sure you can find those storylines here, but that is not what the trade is willing to embrace. They are willing to openly embrace the idea that we're going to have more supplies at for the 2012 marketing season. With that in mind, and after the market's had a nice recovery rally here, we've chased the shorts out of bounds. We had shifted the technical conditions into a mode where they're not likely to prompt or support new buying energy. I think you've got the opportunity here to see prices start to tip over again. But more importantly, if they begin to tip over, what are we dealing with? And my concern is, based on what I just mentioned about the traders willing to embrace a more bearish new crop scenario, if we start to tip the trade over to the downside and begin to build a little bit of momentum, you still have a global economic backdrop that has concerns. You still have a Greek and Euro situation that's not going to go away anytime fast. You have very ample global supplies of wheat, very ample global supplies of beans. You have growing U.S. corn carryout idea expectations for the next marketing year, and you have a trade that's not enamored with being bullish only this year. They are very much willing to be bearish. And I think that that combination, if we begin to roll over, is going to quickly build some momentum from the trading community to be willing to be short. And as we go into the spring, we're not going to have as big a snow melt as we've had before. We're probably not going to have as much spring flooding as we've had. That probably means we won't lose as many acres as we did last year due to prevent plant. It also means that we're probably have a better chance of not having a late spring. We're going to have something close to a normal spring. And while there are longer-term soil moisture deficit issues in parts of the Midwest, and certainly could eventually become a storyline, that is not the thing on the front burners here. And my concern is that between now and say a successful planting season, by the end of May, we could see a significant downturn in prices from where they are now, and any downturn that begins now, it could take a long time for it to recover and require some sort of summer weather concern. So from a producer standpoint, I think that even though current prices aren't as good as the opportunities you had earlier to make sales during the summer or late summer in 2011 for the 2011 production, these prices that we have now are at the upper end of what potential you've seen over the last few months, and certainly at the upper end of potential that you've seen since the September debacle in grain prices. And I think that rather than being concerned about what we missed in the past, looking ahead and looking at the landscape, these might be the upper end of prices until we get a summer weather market. And the downside, my concern is it's going to be much greater, or potentially much greater than what is a prevailing theme out here. And I think that we have to develop greater respect for that downside risk. In all honesty, I don't see a good scenario that offers producers a big bump in prices over the next 30 or 60 days. And many producers are going to want to make some sales in that window. So I think a guy's got to take a hard, serious look at why maybe tonight's values are as good as we're going to get, and the upside potential here is extremely limited. Outside market, as far as tonight is concerned, outside markets, you're going to be some disappointment with the lack of developments in Greece, and I think that's going to probably weigh on the stock market. Iran is going to continue to be a concern. There's no doubt about that, but I don't know that there's anything greater in terms of fears than we had last week. And the crude oil price action last week really wasn't in line with the elevated concerns that took place in the media anyway. I also think at weekend developments with Israel and Iran, it appears, if anything, we may have lowered the anxiety level just a little bit. So as far as tonight is concerned, I think we're going to be lower. Maybe we trade on both sides. The guy always has to respect that. But in all honesty, I don't know why we would. I don't see any reason for us to be up here tonight. So I think we're under pressure tonight. I think we stay under pressure. And but I think a guy's got to take a step back view and be much more concerned about what kind of downside risk we might have here over the next 60 to 90 days. For the DPP Grain Desk, this has been Dwayne Lowry. Thank you.